Hello, everyone. For the past week and a half, I was trying to tell you guys to be bullish. A week prior to that, I was trying to tell you guys to be bearish. So we are playing the market absolutely beautifully. The point of trading, the point of doing this analysis is that we are able to move fluidly with the market. If the market starts showing us weakness, we go short. If the market is starting to show us strength, we lean long. That is the point of these videos. So I hope that I'm helping you guys stay on the right side of the market. I was bullish this entire week and a half, and it's worked out beautifully. So in today's video, we're going to have to learn what the next steps are for the market. I'm going to go over the SPY, the NASDAQ. We're going to take a look at why the tech stocks are rising this much. The IWM, the dollar, the bonds, and the VIX. All right, so without further ado, let's get started with the video. And before we start, if you guys enjoy this content, please make sure to like, subscribe, put on the bell notification. So after you guys click subscribe, you guys can get notified every time I post a new video as well. And I really appreciate your support. So number one, we have to look at the macro news for this week. So Monday, completely dry day. Tuesday morning, we have news at 9:45 and at 10 a.m. So we have Chicago PMI and then CB consumer confidence. So definitely, as we're trading on Tuesday, we're going to have to keep that in mind, that we're not going to be holding any positions during these times. Then Wednesday, we have more news during the market hours as well as pre-market. So we have news at 8:15 a.m. and then we have more news at 10 a.m. So once again, we're not going to want to hold anything. But then at 2 o'clock, we're going to have the Fed rate and FOMC statement. So Powell is going to be speaking at 2:30, and then the rate and everything is going to come at 2 o'clock. So this week is going to be very, very important for that. Not just for the macro. This is a very, very important week, but we're also going to go ahead and look at earnings as well. So this is a very jam-packed week. And then Thursday morning, we have more news pre-market, but not as much. And then Friday, we have even more news pre-market and then more news at 10 a.m. So keep that in mind. Wednesday is the very, very big day for Fed rate. People are expecting a 25 basis point hike, so we'll see how that turns out. Next, of course, we have to take a look at earnings. So Monday, not as much. Tuesday, we got ExxonMobil. So crude oil and energy stocks are going to be affected by this. We have UPS, which is a decent economically sensitive stock as well. Then we have AMD. So AMD, of course, is a very important chip. So then if AMD reports really, really bad earnings, then NVIDIA can be affected as well. Then Wednesday, after hours, we have Facebook. Then Thursday after hours, we have Amazon, Apple, and Google. All three on Thursday after hours. So this is a very, very heavy, important week. Not just for the Fed rates, but also for earnings of these large trillion-dollar companies. So we're going to have to not hold anything too aggressive overnight, because a lot of things can really, really change based off of earnings. And especially, obviously the Fed rate, the IV is going to be very, very high, especially for options traders. But yeah, so let's take a look at the charts now. First, I want to go over the NASDAQ and the tech stocks. So we know currently, clearly over the past few days, week and a half, the NASDAQ has been heavily outperforming the SPY as well as the IWM, the Russell 2000, right? And the reason for that is because earnings, as these large tech stocks have earnings, prior to the days prior to those earning dates, there is usually always an influx of money that goes into the tech sector and basically, quote unquote, a run up into earnings. So earnings run up. So all of these tech stocks are showing extreme strength heading into their earnings, okay? And the NASDAQ is leading this rally because of all of the earnings clustered up very, very close to one another. So the money is going into those stocks prior to the earnings release, okay? Now, the other thing that I want to take a look at is the large tech stocks. But first, I want to just drill this home. When Tesla is showing this much strength on a daily chart, you cannot go short. So if Tesla is up 6, 7, 8, if Tesla is up 7 or 8% for the day, don't even bother, in my opinion. Don't even bother trying to short the market, because there's, first of all, Tesla has a lot of institutional buying power, obviously, right? It's based off of Elon's social standing in society and his relationship with other banks and funds and everything like that. There's a lot of money that goes into Tesla, and not just the institutional money. There's a lot of retail money that goes into Tesla as well. So given that fact, Tesla is a very, very good gauge for the overall market. If Tesla is down 7 or 8%, you should not be trying to go long. If Tesla is up this much, you should not be trying to go short. So that's number one. That's the first thing that I wanted to kind of drill home, okay? Tesla was a very, very big reason why the market was this bullish, okay? Now, when we just take a look at all of the large tech stocks, it's very hard to be bearish. With a clear uptrend like this on Apple, very hard to be completely bearish, right? Clearly looks very, very bullish. We're in an uptrend. You'd rather wait to go short. Once this uptrend breaks, much easier trade, right? But before, until it breaks, just go with the flow, and the trend is your friend, right? Google, clearly also strong. We were short Google, and we played it massively. The puts were up 50%, and then basically, we became bullish on the market afterward. So this worked out really, really well. Now just taking a look at Amazon. Clear cut. Look at this beautiful bull flag here, breakout, easy. And then of course Facebook is showing ridiculous amount of strength as well. We have all of these stocks are about to report earnings. Okay, so all of these large $1 trillion companies are about to report earnings, so money goes into them prior. Okay, and then Microsoft, not so much, but all of these other stocks are about to have earnings. So we went over the tech stocks. Cool. Let's take a look at the SPY. All right. Currently, we are still bullish. Okay. This can still continue going up. Right. But now that we have this upper wick, this is not generally the most bullish. Right. But the fact that, so look, I was trying to explain prior that the MACD was not moving, yet the price of the SPY was moving up. And I was trying to explain with technical indicators how the SPY and how with price movement, things look bullish. In my opinion, right now, the SPY can continue going up. Basically, as long as it remains above 402 to 401.50, this will continue going up. But Monday, right, heading into tomorrow, unless we open very, very bearishly, the easy trade would be to have short-term calls, but then you could also be going short with this as a stop loss, this high as a stop loss. But the issue is that we just showed a lot of bullishness. So let me show you guys the chart of the SPX. So this is a chart of the SPX. Number one, we had a downtrend from the most recent highs. We basically broke those highs and we had two closes above, right? That's number one. So this is a very bullish continuation. Okay. So the momentum is still clearly bullish. We broke out on a bull flag as well. We were at a bull flag at resistance and we broke out and we had two closes above. Clearly bullish momentum, right? Number two, this trend line from December 2009, we got a close above. And if we get another close above, then it's also pretty bullish, the fact that we're closing above this trend line. But then it becomes interesting because we have the statement and the Fed's rate coming out on Wednesday. But overall, looks very, very bullish in the short term. All right. But once again, you can start getting long-term. So most likely what's going to end up happening for tomorrow, right? If we gap down, right, we're going to get a bounce. I would be very, very surprised if this was the Pico top and we gap down and we just continue falling lower. I would be very, very shocked if they do that, because there's still so much buying pressure. There's a lot of buyers still stepping in. So tomorrow is not going to be the day that they just give up. Okay. In my opinion, tomorrow is not the day where buyers are going to give up, unless like we have a really, really devastating move in the futures. But unless it's like a 2% down, I don't even know what would cause buyers to stop stepping in. But right now, buyers are clearly looking to buy, right? And towards the highs, right? As we get closer and closer to the highs, that's when I would rather go short for a longer term. And then I would go short for a longer term, maybe, right? With a stop loss above this level here, above like the most recent high, basically. So if you go back to the SPY, I would be going short. So I would be leaning long, right? The momentum is still bullish, but you can easily also just go short with a stop loss at Friday's high. And it's really, really, simple. But the issue is that the dollar, the bonds, there's, we're going to go ahead and take a look at that. All right. So currently the SPY still clearly looks bullish. All right. But to get a holistic view of everything, we need to look at the bonds, the dollar, and the VIX. So let's go ahead and take a look at that. So one of the reasons why I was bullish on the market was the VIX looked extremely bearish. And we know that the VIX, it has an inverse relationship with the market. So if the VIX is going up, then the stock market should be going down. So when the VIX is falling like this, and it's falling, it's going down, that means that the stock market is going to do the opposite. Currently, this does not look bullish. All right. This does not look like a bullish setup on the VIX. The MACD on the VIX, we just got one cross down below. Generally, this is a bearish crossover. And if we get one cross below, the next day should also be, a continuation, or the momentum should continue falling lower. So the fact that the VIX is still showing weakness like this is another indication that the SPY can continue showing strength heading into Monday. All right. But Monday is the day, in my opinion, that we would start scaling into puts. And yeah, so there's that for the VIX. Now I want to take a look at the bonds. So the bonds, we know, have a bit of a more correlated relationship to the market. So if the bonds are showing strength, then the market should also be showing some strength. So what was interesting was that the bonds broke below this uptrend. Clearly, we were in a nice uptrend. We closed and broke below it, but it ripped right back up. And now we're basically at resistance again on this trend line. So it wasn't this was not a huge red candle, right? Buyers stepped in and bounced it back up almost to its highs. So that's still showing buying pressure on the bonds. So we only become extremely bearish or bullish based off of the bond movements if we get clear-cut weakness or strength above major levels. So for example, if we saw strength above these highs, or if we saw like clear-cut weakness below like these lows over here, then that's when things would start taking into effect into the market. And we've seen that over the past few weeks and months as well. All right. So the bonds currently, they don't look entirely bullish, but this was a lot of buying pressure. We held support, and we didn't close below the prior low. And yeah, but pragmatically, we did break below this uptrend level. So there's that. We have to take that into account on the bonds. Next, let's take a look at the dollar. So the dollar has a bit more inverse relationship to the market. If the dollar is rising, then the stock market should be falling lower. Currently, we can see that the dollar has a bit of a falling wedge pattern. People began to think that we were going to break out and close on the dollar. And basically, if the dollar was going to break out of this falling wedge pattern, it would be bullish on the dollar, but bearish on the market. That clearly did not happen, and we failed to close and break above. Also, we can see that the momentum on the dollar is very oversold. It's very overbought. So we're going to need to see some extreme buying pressure out of the dollar, and it's starting to look bullish. All right. Pragmatically, this MACD it's doing what it needs to do for the momentum to move up. Okay. So pragmatically, for the momentum of a stock to move upwards, this yellow line needs to start moving up as well. Okay, so right now we can see that the yellow line is clearly moving down, right? The only way for that to happen is if this blue line, right, on the MACD starts to completely, really overshoot and show a lot of strength. By then, the yellow line will be able to average out and slowly start changing and moving upwards as well. But for this move to slowly start changing, move upwards here, the blue line needs to start really showing a lot of strength. And the only way for the blue line to really start showing a lot of strength is we need to start seeing some strength out of the dollar. That looks like it's setting up for this. It could basically happen this week, but that's currently what it's looking like. It's not 100% guarantee, but the dollar is starting to look more bullish than it has. I'm not gonna lie. So this clearly looks way more bullish than it has, but it's not an automatic reason to be short on the market. This is just one data point. So to summarize overall, I would be very shocked if we end up just gapping down and never retesting back up to like 406.50 to 407. I think almost without a doubt in my mind, we should see at least 406 to 407. I would be very shocked if we don't. But yeah, if we gap down and we show a lot of weakness, it'll make Monday very easy for us, because then we could just lean short. But what I'm thinking is going to end up happening is Monday is going to continue showing a bit of strength. We can start stagnating up here a bit, right? And then from here, we can start scaling into longer term puts with a stop loss at this high. But overall, in the short term, for scalping, for day trading, if the market structure continues, for example, if we open at like 406, 406.50 for some reason, right? I'm going to be leaning more long. The momentum is still bullish, so we have to play alongside the momentum. It makes it much easier to day trade. So yeah, I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.